Good morning. One of the biggest advantages for the BRICS countries and their new economic bloc is that these economies are the low cost producers of almost everything. Just about everything coming out of the ground or everything that's growing on it costs a lot less to produce in the BRICS bloc than in North America or in Europe. And in a sense, this has always been true. Russia is the lowest cost producer of most crops in the world and has been for years. Brazil has always been a low cost producer of its food, but what's radically different is how much more productive the natural resources economies have become now with Chinese equipment and Chinese investments in their infrastructure. As farmers in Brazil were able to buy low cost farm equipment from China and ports and logistics there were developed, farmers in Brazil and all across South America now have world markets open to them for export. In Russia, new railroads and logistics hubs were built to create vast new markets for their agricultural industries. The same phenomenon is playing out across mining and energy, and it's everywhere. And we now face the situation that the BRICS group of nations are doing much more buying and selling between themselves instead of with us. Earlier, we looked at how this was playing out in grains markets and in coffee and more recently for cocoa and chocolate. China invested heavily for infrastructure and logistics in the countries with high production, and they signed long-term contracts that guarantee producers there higher prices than those producers would get if they sold their production instead to our commodities exchanges in Europe or the United States. So these bulk commodities are coming out of our markets and causing shortages and higher prices at home. But when Chinese buyers move in, our brokers and agents and resellers are cut out of all the business. So that results in lower prices for consumers in China and across the BRICS bloc. Their producers are making more money and their consumers are spending less money. And it's counterintuitive, but true, that markets in China and India and elsewhere across the bloc are well supplied with food and prices are falling while prices are rising in our own markets. Here, the Wall Street Journal is getting readers ready for even more food inflation. We'll look today at sugar because we haven't done that yet. Since 2019, the price of sugar in the US has risen about 70%, or by nearly $1 a pound. ConAgra and Duncan Hines are trying to pass along their higher costs for cocoa and sugar, and supermarkets are complaining that their margins are going down even though the prices are going up. Later, they quote Hershey and Mondelez, who are raising prices for the same reason. Prices are much higher for sugar and cocoa, as well as for all the substitutes and related products. On food inflation, it just doesn't end. And here's a chart for the sugar again, the cost increase since 2019, which was 5 years ago. But here is the price chart for China sugar since 5 years ago. It's basically unchanged since 2019. And since 2023, sugar prices in China are falling sharply, down over 20%. On a 6-month chart, Chinese are paying less for sugar than 6 months ago. Authorities are even concerned that low sugar prices in China are causing changes to the Chinese diet and putting pressure on their own domestic sugar industry. This helps explain everything better. It's the cost of sugar production around the world. Brazil is by far the lowest cost producer of sugar at $339 per ton. Central America is higher at $400 per ton. Thailand is next lowest cost at $458, and India's at $470. The cost for China's domestic producers are closer to the averages in Europe. So the reason that sugar prices in China are falling, despite high domestic production cost, is that China is buying their sugar from Brazil. Brazil is the world's lowest cost producer, and most of China's sugar imports come from Brazil, so their prices are low. The United States market, on the other hand, gets most of our sugar from Mexico, and Mexico is in the middle of bad sugar crops, and prices are going higher. Early last year, the sugarcane harvest in Mexico was without precedent. That's how bad it was. Several standard deviations below 10-year production averages, and no improvements on the way. In 2022, the US imported 4 times more sugar from Mexico than from Brazil, with the rest coming from elsewhere in Central America. Now Mexico can't produce enough to meet demand, and Central American sugar costs a lot more than Brazilian sugar anyway. But conditions are much better in Brazil, and for the BRICS countries, Brazil is selling its sugar too. This is from NASDAQ last month. The world price for sugar is at 3-month lows because Brazil produced about a third more sugar than was expected. 20.35 million metric tons crushed against a forecast of 15.5. Brazil's exports of sugar are also hitting records. Brazil exported 31.7 million tons of sugar through the first 3 quarters of last year. And NASDAQ just said that the December crush was the highest ever. So there's a lot more coming. Indonesia dramatically increased their buying volumes from Brazil, and they even passed China as Brazil's #1 destination for sugar. Here are other numbers. Brazil's sugar exports to India was up 72% year over year. Indonesia's was 3 times more. Exports to the UAE was up nearly 3 times. Egypt was more than twice as much as the year before. Know what all those countries have in common? They're all BRICS countries. Brazil, China, and India since the beginning. Egypt, the United Arab Emirates, and Indonesia are newer members in the past several months. I've never been to a BRICS meeting, but I'm a salesman for a living, and I bet I know the sales pitch to governments and state ministers from around the world. If you want the best prices on food, your country should join the BRICS. If you want the world's best prices on energy from Russia and the Middle East, your country should join the BRICS. If you want China to invest billions of dollars into your country's infrastructure and logistics and have guaranteed markets for anything coming out of your mines and farms, your country should join the BRICS. If you want to close the loops in your value chains to get access to Chinese and Indian factory products at the lowest prices, your country should join the BRICS. If you want to buy and sell with other countries but without using banks in the US or in Europe, your country should join the BRICS. That's it. If I were the new membership director of the BRICS, that's the whole sales presentation. It takes 30 seconds. There's a sign-up table in the back and free snacks in the dining room. Have a nice day. I bet it really is that easy. This is Baijiao Shan Mountain in Hunan province. Be good. Lead us not into temptation, but deliver us from evil. For thine is the kingdom, and the power, and the glory forever. Amen. Father, thank you for this precious brother who has come. Thank you for making him a man of integrity and honor and wisdom. Thank you for making him a brother.